we're back with part 3 of the web series, and we're hitting it with the investment types.
Alright, so we've already talked about stocks and shares a bit, and we covered what a stock is, and because that's going to be the predominant of this whole kind of web series, we're not going to talk about it here. I'm just going to talk about a few other investment types and the ones I am also in and the ones I don't like. So we have, first and foremost, bonds. So first off, straight before I even explain what it is, I don't like bonds.
Why not?
So I've never been in a bond, and there are loads of people that do bonds, but it's not for me. I feel like it's not for my kind of investment style, my investment type, but mostly because I feel like on average they don't keep up with inflation over a given period of time. So, and they're essentially loans as well. So it's not kind of for me. But so yeah, what basically a bond is, it's they're loans so a public investor basically, a bank would go to a public investor and ask for a loan. So the bank will go, we need £100.
Yeah.
And in 3 years' time, we will give you £150 back. So they're asking for how much, they're giving the terms of how much they're going to pay back and the condition on when they're going to pay it back as well. And there might be other conditions in there as well, but we're just going to keep it quite simple. And that's essentially what a bond is. It's a loan. And the biggest public investor that does this is the government. Most governments, if not all governments, do bonds. It's a way to regulate money, and it's another investment field. But for me, kind of being in the loan side of it, it's not for me. If you do some research, you might find a niche in there somewhere, and maybe you can teach me something about it, or you guys at home as well. But personally, I don't like bonds. But let's move on to the next one, commodities. All right, so my view on commodities is very different from when I began. So I'm going to kind of say it in the sense of when I started off. So this is a beginner and intermediate guide. So I would say just stay away from commodities in general. So commodities are things like gold, oil, silver, soya beans, actual commodities that we need and have. And why I say stay away from them, because they work in kind of cycles and trends. And like for instance, gold, like when everything is going up, gold is usually going down, and when everything goes down, gold usually goes up. There's a whole kind of understanding of why gold is the opposite of most economies, especially the US economy, but we won't get into that today. But if you can understand these cycles, it's great to kind of be involved in it. But in general, as a beginner level, I would say stay clear of them because of these cycles. Because there's this thing called like seasonality as well, which is another thing. And there's like so many kind of different layers you kind of need to know. But in terms of like, because you probably hear that a lot of people are in oil and stuff like that. So if you do want to be in oil because it's a big thing and everyone needs oil, I would say go to an oil company. So like, top of my mind, Shell.
Yeah.
So they have oil, but they're a business, they're a company. So I would say as a beginner, if you want to be in oil, is to go for a company like that instead of going directly for the commodity itself. But there are loads of commodities, not just gold, oil, silver and soya beans. Loads of them. I was actually just reading about avocados.
Avocados?
Do you know, because the big craze at the moment is avocados, It's good fat, it's green, it's healthy.
Yeah.
And there's like a joke me and my friends had, if you got it at the forefront of it, if you invested in avocados, you could be a millionaire. The whole millennial thing with avocados and whatnot now. And there are some companies, and obviously you get businesses like Chipotle and stuff like that use avocados quite a bit. But then you get companies as well that actually don't just solely produce avocados, but a large portion of the business are avocados. And if you're looking at their kind of progress over like a 10-year span, you can see the big difference that's like they've made. Right. So it's something I might actually look into later, but that's a different story. Sidetrack there. ETFs. So ETFs is something I started with. I think it was actually one of my first ones. One of my first ever ETFs was a real estate ETF. So ETF stands for Exchange Traded Fund. So what that means is, say you're trying to get into tech. Let's use tech as an example. So if you're trying to get into tech companies, say Apple, Microsoft, Tesla, but you don't know which one to get involved with.
Yeah.
So you go to you use an ETF. So an ETF basically gives you exposure to many different kind of tech companies all into one share. So how it works is the kind of stock value of each individual company that they have involved in that ETF is then averaged out and put together for just that kind of one stock value for that ETF. Does that make sense?
Yeah.
Yeah.
Is it wise to start off with tech?
No, I wouldn't say it's wise to start off with tech. We'll come into that in a bit, like good things to be involved with and not great. I would say tech is quite volatile. So as a beginner, you can always hear like Apple and those big companies, but even they don't always go up. Like they have times when it comes down, or a launch of one of their new products doesn't do well, their share price will drop as well.
Yeah.
And there's things like staying in the news is always a good thing. We'll come into that a bit on what's good to get into and what's bad to get into a bit later. But so an ETF gives you exposure to a large kind of amount of companies in that field in one stock. So it's the average of all those kind of company stocks put together into one stock. Why an ETF is also good. Say you have you want to get into Apple, Microsoft, Tesla, and like 10 other companies, tech companies. You have to pay individual fees on each of those kind of transactions you do. So say it's like £5 every time you want to get into each kind of company. Buy each share for each company, right? You will have to be paying £5 each company. So let's say there's 10 companies, that's £50 you're paying there. Whereas with ETFs, because it's only one stock, you're only paying one fee. You're only paying £5 while you still have exposure to a large portion of kind of these companies. And it's the average movement of them going up or down as well. It's not just every individual company. You don't have access to every individual company within the ETF. It's the average of that ETF put together.
Okay.
Yeah?
Yeah.
Cool. Next is mutual funds. So I don't do mutual funds. I never have, but I know actually a lot of people that do and like it. So basically, a mutual fund it's more or less the same as an ETF, but just with higher fees.
Oh, is that it?
It's basically it, really.
Okay.
So like I remember at the start. So yeah, like I said earlier, so one of my first ever investments was an ETF in real estate, and I think till I sold it, it made me a good like 6-7% return on average. I think there was once where it did like 9 or 10%, but on average it would do like 6 or 7% return, and I didn't have to worry about it. ETFs are quite solid if you get a good one. If you're not doing something like commodities or something like that, it's quite a good one, and they tend to just trend upwards for a good amount of time. So yeah, mutual funds, same as ETFs, but just higher fees basically. If you want to get into it, probably find someone else or just look online a bit more to find out about them, but not something I can properly tell people about. FX. So FX stands for foreign exchange, also known as probably currencies. So trading currencies, the buying and selling of currencies. So this is the newest investment field I'm in at the moment, or investment type I'm in. But I would say for beginners or even intermediates, do not do this at all. The only reason I'm in this now is because I've progressed to that stage and I've gone through the education of the Forex trading, or people as commonly have heard day trading or intraday trading or swing trading, which we'll come into a little while. And I've done the education of it as well as the psychology of it. So this is great in terms of reward. Like you can double your money in a day, in 4 hours, and 1 hour, in 5 minutes if you wanted.
Yeah.
But you could also lose your money in that amount of time. So is it worth kind of losing it if you haven't got the actual proper education behind it? it's a very risky thing to be involved in if you haven't got that education. So just take that into account. But it's basically the basic concept of what it is. It's saying it's a probability game. So what's the probability of the US dollar going up compared to the Great British pound going down? So it's not something you can just tell me, oh yeah, it's like, you'll have to look at charts, this, that, and the other. There's so many different kind of influences on this as well. So it's a big thing. And if you do want to get into it, there's websites like Trading 212 and something else. There's probably loads now. I don't know off the top of my head. And you can go to YouTube and learn about it and stuff like that. I've gone through an actual trading school where I go there physically and I learn about it, and I still do learn about it because I'm quite interested in that as a new investment type for me. But I'd say stay away completely as a beginner.
Okay.
And the last one is futures and options. So I'm not going to talk about this for a very long, period of time right now, because this is something I'm not in, and it's very complex, and I hope to get there someday, but I'm not bothered about it right now, to be honest. So so at the trading school I go to, a teacher of mine, a very great guy called Simon, he's told me about kind of getting into these futures and options and what I could do with these investment types. But it just goes over my head, really. I have no idea what's happening with them. It's very complex. So a future is basically stating you're buying something in the sense of saying, in the hopes that in the future the cost will go up, basically the value will go up.
But it might not.
It might not, but there's conditions attached to it as well. So you can say so let's say £100,000 in the real estate. So you're saying this £100,000 house or something, which is quite, it's quite cheap nowadays. Oh no, that is quite cheap. £100,000 in a house. If it goes in 2 years or something, it's gonna
increase.
Yeah, if it increases, but then there's kind of conditions that they're say something like there's no recession or something like that. It's quite.
What exactly is a recession?
We'll come into the recession in another video because that's a big topic, but I think it'll help later on. But the recession is basically a financial crash. So when the economy is doing really bad, basically, and it's gone from highs to quite lows in a sense of the economy. We'll come on more to that in a while. But futures and options basically stay away from. So just in brief, bonds are loans mostly from banks asking public investors, so usually the government. Not something I do, might be something you or you guys at home want to do. Commodities, as a beginner, definitely stay away from. Maybe intermediate, maybe to get involved into. ETF, that's what I started with. I quite like them because they trend well and they make you good solid returns, and you don't have to look at them for quite a little while as well. Mutual funds are basically ETFs with higher fees. I personally don't do it. It's up to you guys if you want to do it, but you'd have to do more of your own research into it. FX I do, and I love now, but before I had my kind of stereotypes of it and my kind of what's the word of it, perceptions of it being very unsafe, and it is unsafe until you get the education, really. So stay away from, as a beginner and intermediate, stay away from. It's only when you get to the advanced stage that you should even be worrying about that. Futures and options, stay away from completely. I'm in so many different investing fields, but I don't even do futures and options. It's very complex and for kind of the high end kind of side of investing. So don't even bother with it anytime soon. And that is about it. So what do you guys like? Are any of these kind of appealing to you? Or maybe are there other types of investments that you've heard of that you want me to talk about? Let us know and we can go through them. Have you heard of any other investment types?
No, not really.
No? Well, hopefully some of these can give you a start then.
Yeah.
Well, I think we'll wrap that up for this video, and we'll see you in the next one, guys.